Test, test, test. Can you guys hear me? Test, test, test. All right, it's showing I'm live. Can y'all hear me? Test, test, test. You can hear me, Ned? Outstanding. Hey, at least if you can, type in chat if you don't mind. I'm not sure anybody's there. How are you hearing me, Ned? Are you hearing me through Discord or YouTube? It's weird. Weird stuff. All right. YouTube. All right. I'm not sure how many we got online. Yeah, I'm just waiting for a few. Get some members. I don't see that, but no big deal. Fly guy. Man, is NQ going to come back down, or we going to... We already got our weekly supply. He has two, so 295 on NQ and 55.18 on ES. I don't see 11 people on. I don't see 20 people on. Mine doesn't show me that. Mine shows me 3 people. Yeah, I just wish we could have sold some PCSs. This long and strong. Set was down at 175. So we're up, what, at almost 140 on NQ. All right, I guess we'll start. Y'all hear the fans in the background? If you do, I apologize. It's 92 degrees in my office. It is hot. I think it's the hottest day of the year. And here in the Springs. Discord, do we want to use workshop to chit chat in? Yeah, I don't see that. All right, let's get started. I posted the link. Let's chat in Discord on the other one so we don't bother the folks that are trading, making bank. I'll see y'all up in workshops. And we are going to get started. Not sure if we got any new members or non-members out there. If so, congrats. You're going to get some free alpha tonight. Not going long. Just going to run through some basic stuff. Chart setup, technical analysis, where PVI is, and then areas to watch for. Big week. Basically, we got FOMC, and more importantly, we got refunding. So those will both be interested. I think the market is I think we're going to have some spicy moves. Back ratios are going to be the play. But here we go. SPX chart. You guys can see it live, King. And let's go to, yeah, you guys get truncated, so I can't see your name when I stream for some reason in Discord. So all I see for you is P. Anyway, all right, here we go. We got the levels here. PVI is 56.72 at the top, just above the all-time highs. Guys, I didn't look at all-time highs when we made this number. And then PVI is 52.42 to the downside. Keep in mind the VIX closed at 1638 and was down 2 points on last week on Friday. Closed down 11%. So we should have some premium in these positions. We're certainly going to have some premiums in the calls tomorrow morning if they hold up here. Just real quick scenario. Red line is the 50-day moving average. I can open it here. Red line is our 50. 100-day moving average is white, and then our blue is our 200-day moving average way down yonder. And we'll get to that in a minute, but let's just go through a quick recap of what's happened and what to see. The first thing we should notice is that we start seeing dots on our trend indicator. Again, this is SPX daily chart. Momo, big one, especially for new members. Go watch the video on it. You only use it on a daily. You can use it on a higher than a daily, but the ratio between this daily and this is higher time frame. And so the ratio between this indicator, it's two indicators in one, is this is the daily graph, the blue and white, fast line, slow line. The dots are telling us where it is on the weekly chart. So it's a dual time frame indicator. So right here, we were, if we go back to May 1st, Thursday, May 2nd, we were oversold on the weekly, and the blue line got oversold on the daily. We are looking to take swing longs. Swing longs, not just trade longs. Swing longs. We're looking to sell PCS. Right? This is a good opportunity for us to sell PCS. We get up here. We're overbought on the weekly. We're overbought on the daily. We need to wait for the daily to come back down through, which it does right here on the 20th of June. And it's a Thursday, which means what? On Tuesday, Wednesday, and crossing Thursday, our calls, our CCS are safe. Okay, and so again, you can use Momo to give you some ideas of when to do what. Let's go move on. Oversold on the daily, overbought on the weekly. What does that tell you? Probably going to chop. Look at that. Till it gets satisfied. It's an oscillator of sorts. It's the best one I've used ever. And it's not that I designed it. I had a lot of help. But over, 12, 13 years, it became super powerful how I managed portfolios. Like right here, overbought weekly, overbought daily on Friday the 5th, Monday the 8th, Tuesday the 9th. Right in here, it doesn't mean you necessarily can short, but when we have this right here, you know that we're probably getting close to a short-term top. Just waiting for the daily to break down. The daily breaks down. There's a false signal here. We push back up, new highs, and then it really comes off. And that was this last week. What's of note is Friday, green on Friday, was the first day all the way back since before May 24th. It's the first day the weekly overbought condition zeroed out. So that tells us, there might be some upside here. Right? The weekly is gone. If you're if you're an Elliott wave guy, depending on where you start waves, 1, 2, 3, 4, 5. That's not really an ABC. 5, 4, 3, 2, 1. From here, if you want to count those waves, again, to each their own. I want to put Momo here because the newer traders don't know a lot about it. It's a daily indicator, and this up here, the dots, is weekly. When I see this on the top, this just tells me I'm going to get a little bit more conservative with longs. I'm going to have stops because of that price action, the price action we had Friday afternoon at 1 o'clock. The elevator down comes into play when we have these dots up here. Even more so when we have these dots up here and the daily gets overbought. Okay, that's just your oscillator. 101. No, there's no rocket science here. The one rocket science I would put, you guys remember what PWG was last week? It was at 53.93, I believe. One thing you guys are going to do, I'll show it later, but I did it this morning. Again, April lows, all-time highs, the 382, 53.96, and we went right to it, and we had PWG there. So I had two instances as to why I sold the 53.90s. One, this is often bought, the first touch of the 382 retracement, and that was a retracement from a major swing. If you were Elliott wave counting from here, 1, 2, 3, 4, 5, more than 5 up. I'm sure there's some others that count. Shit, I don't know how you don't count that as 2, 1, 2. If you start from here, you can easily go 1, 2, 3, and that's a semi 4, and there's 5. On the bigger time frame, a lot of EWT guys are looking at a massive Elliott wave move from November lows, and this was a 3, and they're calling this a 4, which means 5 is going to go up, and it's probably going to hit 6,000. We're going to get into that in a minute. I want to kind of go through scenarios, right? We're just setting up, and all we're looking at is, here's PWG this week. Well, if anybody's going to sell PWG calls, man, you got a set of stones, right? You won the gold medal. PVI is all the way up at the all-time high. Baseline's just underneath it, 56, 67. 5 points underneath it. Auto's up there as well. Again, there's a good chance we return back here. J. Powell speaking, refunding agreement, and then FOMC are going to be real big, not to mention Apple, Microsoft, AMD, Meta. We got tons of earnings this week. So I think earnings is kind of a catalyst for the market to do what the market wants to do. And then I'll run through our gravity points. And this is where we are in the gravity points. I'll show y'all a little something on the gravity points, a little something. I just don't want to make this terribly long. We're not going for hours tonight. I'm just doing SPX. Let's go to, you know what, let me do it on the daily. Let's go back to last week. And this is the one thing I'm going to recommend to you guys. When the market pulled back here in May, I would highly encourage you guys to let me remove my drawings. Let's just look at the gravity points. I shared this with AR and Rick this morning, but let's replay it back to May lows and see where we are when the market switched. Okay? So the big thing you need to see is A and C crossing over. And I'm going to just fast forward it one day at a time. We're just watching A and C for the crossover. Getting closer, getting closer. Okay, now we've got A and C crossover, and the one thing you should notice with gravity points is A is now negative. Okay, A is now a negative gravity point. It is below spot price, and it has a negative slope. C is still positive slope and playing catch up, right? Because A just came back down to C. B up here is pulling. This is like your immediate trend. This is your longer term trend if you're watching gravity points. We should make a run for B. Obviously, we know we're making new highs, all-time highs. Not sure if we're coming back down here. As you start to see divergence between A and C, just know we're getting awfully elevated. So if I'm trading iron condors here, or if I'm trading risk reversals where I'm selling puts to buy calls, Case is selling puts, right? My world is I'm going to sell puts below A, and I'm going to buy calls at B, because those are the targets. Here on a push, squeeze, here on a retracement. Is it going to go past here? Maybe, but not with B and C both being positive. It might go to here. We might wick down, but we're coming back to A. And let's let it play out. Where are we now? We're at 27th of June. And again, we talk about replay and Top Step and Apex all the time. All right, so you see her pushing B, right? So if we're selling puts this week, if we're selling puts to buy calls, risk reversal, all-time highs, We got a reason. We got a target up here. Not a fib extension. Not a fucking fractal, from the third dimension, X factor of 5 or 4.8. We got a gravity point that is accurate as we can get to the upside. That's my target. And we hit it. Obviously, it's sitting there. We know now because we're making all-time highs. There she is. Now, when we hit it, let's pause. Now, when we hit it right in here, 56.30, and Nunya is the first one, I started talking to you guys about the put debit spreads. I was talking about it back here. We came down. We moved higher. This is when we started talking about the 5250, 5500 put debit spreads. Now, where are we? We're at B. C and A are not, they're not compressed, but they're not expanding. A is still a negative slope. We now have hit our upside target. I'm not real interested in longs from here. This is where I jump in Discord and I say, look, Moose, Case, other people, butterflies, 112s, Fly Garden, selling puts at all-time high. It works till it doesn't. I'm with all that. I'm just going to tell y'all, I've been playing this game for 30 freaking years. This is not a time to have risk on. I don't give a shit if it's the first all-time high or it's the fourth all-time high. When I see this picture, it might be the last all-time high. And this is a conversation we had. I'm in Cancun. Actually, we're in Cozumel right here. And I told y'all in Discord, this might be it. Bob and I had this conversation. This might be it. Why? We hit our topmost target. Extended topmost target. Count waves. Count from here. Count from here. Don't count that as a 2. It don't matter. 1, 2, 3, 4. We're at 5. We've had 5 waves up. Maybe 7. But we've had plenty of waves up. And we are at utmost target. And now look what happens. A is negative. A is not flipping. A is not climbing. Price is overextended too high. It does. But when you've got this 5-wave count and we've hit our top inflection point, the reason why is this. When A crosses over, back down. Leave it there, though. Leave your chat there because it helps other people. When A crosses over and is negative, you don't chase longs anymore. Now, where did we close Friday? 54.60 from 56.70. You cannot tell me 210 SPX points, you being wrong, you selling puts is smart. You can't tell me. And sure enough, change the structure. Now, have we broken here? Not until right here. We haven't broken a swing low until when? Wednesday. And again, I didn't think we'd break a swing low. I didn't. And I didn't think we'd break Friday's low because above Friday's low was weekly demand. Monday, Tuesday, we gapped above weekly supply. We stayed above it all day Monday and all day Tuesday. We never touched weekly supply. Here, Monday, we touched weekly supply in the power hour. And so I know guys want to use the guidelines for rolling PCSs, but do we really want to roll when we've hit top gravity point and we're at all-time highs? I'm not. I'm looking for a reason not to roll. Us making a low a day Monday in power hour below supply was a warning shot for me. And then I see the warning shot. I see my gravity point sitting there, and I'm like, man, I need to go look at something different. Go back to here. And I wasn't home, so it wasn't really fair because I didn't want to make decisions and call outs in chat. But then I'm going to go down here and I'm going to look and see where we are on Monday, Tuesday. This was Monday. And so we're already correcting down almost to an oversold on the daily. But the weekly's still over here. And so you see some major divergence in the daily Momo, and charts not doing a whole bunch. Again, no wicks, and made a high in RTH, and that could be a minor high, that could be a major high. If it's a major high, we don't go back to all-time highs, and that's going to be the high that's going to stay in probably through the first half or all of 2025. Like we might have just seen an 18-month to potential 30-month high, like 2 weeks ago. But don't sell the farm yet. Now we go to this one, and we look at this, and I'm going to bring that chart back up. Is that if you got your drawing on there, and PWG was at 53.93, and the 382 from the bottom, April's bottom, all-time highs, the 382 is 53.96, right? I'm not pleased that I sold this, guys. And the reason why is, for this trade, I literally get home after midnight on Sunday night. I didn't do all this. I had this on my chart. I had this one on my chart. You guys know I drew the head here as a potential left shoulder and a head. And then we came down, then we made another head. Now, is this a big left shoulder and a bigger head and shoulders? Or has this now become the left shoulder and this now become the head? I don't know. Again, nobody knows. Pattern recognition is usually, you already see the pattern. It's just, if the pattern does play out, don't stay wrong. It's okay to be wrong. Don't stay wrong. But this was magic. PWG level, the 382, and buyer stepped in because the red line is the 50-day simple moving average. And sure enough, we went right to it. Went right back to it, and we closed. We opened at it, and then we closed above it on Friday. Okay, where are we now? We've now, the overbought weekly is disappeared, and the daily is in a churn. We just want to see the daily turn up, or the daily come back down. Okay, clear as mud. Clear as mud. I'll post this chart and the baseline in there, but I want to get on and move to stuff that you guys need to be doing. Okay? All we have here, all-time highs, gap, partially filled on Thursday, and gap, SPX gap. Are there more gaps? Sure there are. There's another gap up here. Let's put it in. So what I do with the gaps is I usually put them in to each their own. Like this one right here. I just wanted to show because this one we've been talking about for a month. Now that gap is much smaller. That's all that's left of it. Now, I want to get into this because this is the TNA of SPX, and then we overlay PVI, auto, PWG, baseline, weekly S2, weekly R2, R3. Somebody posted it. Hold on. So then the PWG stuff's got to play out, okay? So first thing, and I haven't done this in a while, but for me, man, guys, you always got to know where key levels are. The 50, the 100, the 200-day. Again, Moose did a great job this past week talking about the 100-day versus the 89, talking about the 144 versus the 50, talking about the 233 instead of the 200. Guys, whatever you choose to use, just be consistent with it. I'm just using the big three because I know mutual funds back in the day would use them. So if it can help me get an idea where we're going to see institutions step in, portfolio managers step in, mutual funds step in, variable annuity companies, sub-accounts step in, not so much portfolio managers. Portfolio managers really aren't using, they're not deploying capital, from a 50-day moving average or a 200-day moving average, but they are using it to kind of gauge the strength of the market. Where are we? Like here, a strong uptrend, we're going to hold the 50-day, we're going to move higher and start closing these two gaps. If the market's strong. Again, Japan's up tonight. US is way up. NQ's up, 0.6? ES is up 0.4. So that's the move higher. Fib structures become important. So what I've done, and I've already shown you guys this one. From April, right? From the April, we know we've had at least 5 waves up and we're ready to come back down. Elliott wave theory. Am I a guru at it? Not even in the slightest. Brother is in 3rd or 4th grade on Elliott wave, and I don't need to go further. That's like taking 2 weeks of German and you realize that's not for me. I'll stay in the course, but I'm not going to get a grade. I'm not putting any effort into it. I count 5 waves, and we come off of a demand zone, and we go 5 waves higher, and I'm starting to look for reversal patterns. And we had a big one, Tuesday week ago. Fib structures, super important. Why? Fib structures are no different than the EMAs. Fib structures are no different than harmonic zones. Fib structures are very highly computer traded for quant funds and high frequency trading funds. All the firms that do high frequency trading. There's a lots of fibs. Sorry, I keep getting these DMs. So here's the fib from April lows. What I've done is I've done another fib structure because I still think it's going to play out and it's going to be important. And that's just going all the way back to November lows. Okay? And it's going to come into play possibly this week. This is my master account. The inflection points, they're all sitting there. And I don't trade from it, but I show it all the time. The first thing I would show you is this is the fib from that we hit Friday at PWG, right? The gray fib goes from right here. Okay, anytime we're trading the fib, and we know where the 382 is. So I'm going to take that fib, and I'm going to turn that, and from a template, I'm going to turn it into a zone. So we know the zone from most recent swing low in April to the all-time highs. We know this zone. The aqua is from all the way back in October lows. So when you see that, the 236 is sitting at 5,300. 5,310 is the half back from April's low. So, do we often revert to a half back? We do it on the hour chart. We do it on a 4-hour chart. We do it on a daily chart. We do it on a 30-minute chart. We often make moves, revert back to midpoint before we go higher. We got a gap underneath us. We got 2 fibs sitting at 5,300, 5,310. Then you look left. Where is the demand zone where we broke structure? From right here. But really, some will tell you there's a demand zone right here, and there is. I would argue there is a demand zone. If you guys read Nick's journal, like I asked you to read, I take this zone right here, I drop down to a 4-hour, I go right here, I'm going to make a square, a rectangle, we're going to go pull in that as a demand zone. That simple. I can't spell, or I can't get my hands on the computer. So we have a demand zone underneath. Again, the gray is from April lows. The gray is from April lows. This is the halfback. This is the 618. The 618 is at a demand zone. As long as we hold the 618, new highs are still attainable. If we fail the 618, are new highs really attainable? No. That's staying in. That's a minor. That's 3 months. If we fail the 618, 52.26, just looking at the fib structure, that new high is going to hold for 3 months. Yep. July, August, August to September, September to October, probably going to hold through the election. Okay? That's a demand zone. We know that's a demand zone from right here. Okay? Where did we break structure? We broke structure, started from back here, but we broke real structure when we took out the March high, or the April highs. That's what the red line sitting here at 52.64. This is my zone that if we get down below this week, 52.64, the market, this right here, I'm going to tell you right now, this is going to hold for the rest of 2024, and it's probably going to hold for the entire year 2025, at least the first half. Yeah, and so this, with it, now we got a gap down here, and now we got the 382, and this is the 382 from where? All the way back to last October. Now, we could hit it, we're still not making a swing low. Understand that. So what I did, oh, there's one more I got to do. This is so fun. Now we got parallel trend line. Moose talks to y'all about it all the time. I do it on the daily. I don't do it intraday. If I wanted to pull this forward, this is coming from the peak, and this was 5 waves up on SPX. And we've got 2 touches. Again, same concept. We got 2 touches right here and right here. That's what I was saying. If I'm an Elliott wave guy, if that's not a 1-2, that is definitely a 1-2, period. There's a 3, there's a 4, that should be a 5. Again, I don't know how. I mean, I guess people can say 5, and then 4, and then 3, and then 2, and then 1 in backwards plan. But then if that's a 1, you know, it's just hard. The counts are all different. So I don't get too far in it. I just look at it as if we come out of demand zone, right here's a demand zone. If we come out of it, you should be looking for possibly 5 waves higher if we hold it. Now, the problem is the demand zone is at the bottom end of the April fib structure, the 618. It's also below our second quarter high until we took it out. This high is more important than this high, market structure-wise, because then your bigger, higher time frame demand zone comes from way back here, and this is the lows. So with it, it's just one of those where you start to see a lot of confluence. Well, so what do we have here? I made a little ellipse, and I'm like, okay, well, this is my ellipse for this week. I think we're going to fill this gap, but I think we're going to fill this gap. I think both are going to be in play this week. I think people are going to have an opportunity for great premium with a 16, 17 VIX. That's probably going to stay. It's going to shallow out a bit. Bonds are going to come off. Rates are going to go up. But that with rates going up, that does not mean technology is coming down. because we have so many earnings. But we don't have a lot on Monday and Tuesday. So tonight, tomorrow, I think they're going to trap both sides. My gut is that we're going to come down and fill this gap. When we come down and fill this gap, this is going to be our third touch of this parallel channel. And we're going to work into this zone. If we fail it and we don't bounce at 53.10 or 52.90, 52.90, if we don't bounce at 52.90, we're coming to 264. We're coming here. We're going to test it. They're going to go test all the shorts. They're going to go test all the longs from here. Right? Market moves up. We made a new this was our all-time high. We took out the all-time high. Market moves up. What does it do? We retrace the breakout. We test all the people that got long right here, and most of them said, you know what? Shit, I'm out. I'm taking a loss. And then what happens? Boom. New highs, retest, new highs, retest, but it's not a retest. Now we're going to change the structure because we've taken this out. So now, short term, bears are in control since Tuesday the 16th. Now, they got a lot to prove down here. And again, this is just parallel channels, gaps, moving averages, 21 EMA, 50 simple moving average, 100 simple moving average, 200s. The 200's in there as well. Holy hell. We come down to 5,300. We break two key Fibonacci levels in the halfback to 618 and the April 1st highs and the 200-day moving average. Man, if we fail that, I don't think we'll fail it. I think we'll come down to it, and we might test it on a wick. And then we need to see if we push up and we get back into that channel. Parallel channels. If we get back into it, it might very well go right here, and then it might roll over. Is there a chance we could drop early this week, hold the channel, fill the gap, hold the channel, and then go work to fill this gap? Absolutely. So, Bob and I sent some DMs earlier today. Stock equity prediction this week, it's going to be really tough. I do think we're going to fill this gap, and I think we're going to fill this gap. I think PVI is safe, just above all-time highs. But we could run, and this could be the third test of the upper channel. We're going to test one of the channels. If not Thursday, Friday. And so with it, you got longer term people that are telling us this is wave 4 of a huge, 1, 2, 3, 4, 5 Elliott wave to the upside. Well, if this is wave 4 and all of this would be wave 3, wave 5 is going to be way the fuck up here. And it could happen. So again, I'm not counting it out. But I don't think it's this week. But Jay Powell speaking, if all the stars align, who knows? What happens if there's a rate cut? We're going to run. And so nobody knows what the Fed's going to do. More important is the refunding is going to be a big issue, but that's Friday. So Thursday, Friday are going to be super interesting. That's why I want to try and get in and sell premium as quick as we can this week. But you are a fool if you do not give yourself a back ratio. Take less premium because we're going to push both sides. We're going to push both sides. If you can get, again, I don't think anybody can get call debit spreads tonight because NQ is at week and ES are both at weekly supply. Or no, NQ is. ES is above weekly supply. You could buy a put debit spread. Yeah, again, these zones, this is really more, again, when we were right here, Friday the 12th of July and Monday the 15th, this is when I was telling y'all, man, the second half of July could be just painfully red. Matter of fact, we might go red for July, the whole month. And Again, I know new all-time high begets new all-time high, and guys selling puts. Again, you can't knock it because it's worked for a long time. We haven't had this structure here is very similar to this structure here. And this is y'all's homework. This is the stuff y'all need to be doing. You need to replay trading futures, and you need to go over here and you need to get on your chart. You need to draw swing high, swing low in April, 314 points. Where does that put us? If we do the April drop this week, that's going to put us at 53.51. Fill in that gap. Again, if you don't pull out your damn crayons and do some of this stuff, when we hit 53.51, you'll be shorting your ass off. Well, that's all the bulls let the market dissipate in April. Is there anything to tell us that more is going to dissipate? Well, we're still in the channel. We're still above the fibs. We're still above the April high. 53.50 is probably a real good place for me to start going long. Not a GBO, but why not go long? Why not take the April drop and go here? Or let's go back. When was the last drop? Hell, the last drop was October. Check this one out. I have no idea. I hadn't done it. I do this all the time. This is 290. October was 290. April was 314. 296. They're both in my damn circle. They're getting real close. And all it is, how far does the SPX drop? Now, y'all are high speed. Some of y'all are going to go in and y'all are going to go pull, that drop. You're going to go pull this drop. This drop was 277. You can go pull drops. That was a big drop. A bounce and a drop. I hate this damn thing. That was 272. 272, 277, 296, and 314. There's 4 of them. Average them up. I don't know. They're all over 250 points. Right? So if they're all over 50 points, how much have we done so far? Can't even see the damn thing. I know people that are not ITG members are like, what is this freaking clown doing? Let's go from all-time high to Wednesday's low. Damn, 277. Had I already done it, man, I might have sold. I might have sat on 4 53.90s for $26. The confluence, a fib level, 277 points from the all-time high to Wednesday's low, or Thursday's low. It was Wednesday. PWG level, 50-day moving average. I mean, there was a whole bunch of stuff in there. That's why I'm on a 4-hour chart, not a daily. But guys, there's a ton of confluence right underneath us. And that just means that until we get through all that confluence, bulls aren't dead, but they're not in a good spot right now. It's open season. And cows aren't real good at protecting themselves. Now, we're going to find out, do we have some buyers step in down here? I don't know. I don't know yet. I got to do the rest of the PVI. I've got it. I've got 90% of it done. I got to do the rest of it. The others, almost every stock. I think Tesla and Lowe's and Boeing were the only 3 stocks that were volatility driven. But that's it. I mean, and the levels are here. I put them up here. The levels are here. When a level matches a PWG, again, we've got gravity point C at PWG right at the top, or right inside that gap that we filled, that we created Tuesday. Tuesday's gap down to Wednesday's open. Gravity point C, PWG, man, that'd be a pretty good debit spread. Go to, let me do it and post it. Oh, I got to do something different. Profile. Again, I think Nick's got a script that allows you to put the profile on here. Oh, man. What do we do? Come on, Vet. Don't screw it up. All right, so let's look at the high side. Obviously, 4, 6, 8, 10, 13, 15. 15 of the 26 profiles are saying 5,600. Where's 5,600? Just above well above PWG. Kind of right in the middle, right? So 15 out of 26 profiles are saying we're going to stay under 5,600, 5,605. We'll go with 16 out of 26. That we stay under 5,605. Which means we don't go fill this gap. And if we don't go fill this gap, that's our head. And whatever we do this week will probably be the right shoulder. Or that's going to be the right shoulder on a head and shoulders. Look to the downside. And this is why it's important, because of FOMC, because of all the tech earnings, but because of the refunding on Thursday, Friday, is PWG down here is at 53.39. It's 53.39 right here. PWG is literally one of these. It's 42. Yep. PWG is one of these 2 models. So there are 2 models above PVI or PWG. What do you think happens if we fail this zone right here, 53.25? What do you guys think happens? All the bulls become bears. And that's why that slide right there is telling you right here, if we get underneath 53.25, 53.11 is the halfback, the big one, the halfback from April, the 238, 236 from last October. If we get down below that and we fail that zone to the left, we get down below this, breaking the channel in a pseudo demand zone. But if we break this, man, it can get real ugly. So what do? If I'm going to put puts on, and I can go over here and I can buy me some 5-cent puts, I want to load up and I want to have like 25. So if I'm going to sell 5 PCSs, I want to have an extra 20 5-cent puts sitting there waiting. So that when the market does spike down, if we do spike down, and then the bulls push, and it's going to be a long daily wick, lower wick, you can sell premium, $13, $6.50, $17, $24 against a 5-cent put way down here. Again, do I think we're going to go down there? No, but anything can happen with J. Powell speaking, FOMC, and refunding. It just can't. I know the equity guys are in line. The majority of the hedge funds I've talked to are in line of, hey, this is a minor top. It's probably going to hold for 2 to 3 months. we're going to probably come back and retest. Where would we retest to? You always look to the 21 EMA. Orange dot, 55.40. 55.40. That's right here. Well, that's a no-brainer. What else do you not see on the profile? 2 times expected move. It ain't detached, is it? There ain't no one pyramid and one way off here. So one of these two is 2 times expected move. One of these two is 2 times the expected move. You know how it's usually by itself? It ain't by itself this week. This week it's got a twin. This week it's got that's a maternal twin, an identical twin, and a paternal twin. Right? They're still twins. When there's somebody else with them, you don't ever, guys, I'm telling you right now, the market can run to here and the market can run to here this week. Hear me on that. I know last week I missed Sunday night. I missed my whole weekend of planning. Monday, Tuesday was great. And then Wednesday it got ugly and I sold, and I was again, I thought we would hold Friday lows or bounce off demand. We did not bounce off weekly demand, and I defended, but I did tell every person before I even posted 5390s, I told every person, if we break weekly demand, you have to hedge. Every person. And I hedged. And I actually made more money hedging and on puts and put debit spreads and short ES and MES. I made more money on that than I made on PVI. I don't put it in the spreadsheet. I don't think it's fair and right. So, all right, guys, who's got questions? Ask away. I don't personally trade SPY. I just saw Ron Tom asking that question. Again, the index, futures to the index, and then an index ETF that's sole job is to mirror the index. So to me, SPY is the caboose. It's not bad. It's not bad. It's just the caboose. And so if you go in and plan with the caboose don't tell you how much fucking gas you got. Caboose don't tell you, it'll tell you your speed. Caboose ain't got drive in another gear and a downshift and reverse. Caboose doesn't do anything. So I caution everybody. I used to say this to Andrew and Options Millionaire. Same thing. The SPY is the caboose of equities, not the engine. The engine is, technically it's SPX. But because we're doing so much intraday and 0DTE, you have gaps in SPX that do not exist in ES. Like tonight. ES is up 23 points now. So if the market opens, we already know where ES is, right? Let me get a chart. We already know where ES is. We already know where weekly supply is. We know where weekly demand is. We don't know where it is on SPX yet. So I don't discount ES traders. Bob will tell y'all that ES doesn't exist. But at the end of the day, you can trade right now, PWG levels. Again, what do we do on ES? We went right to buy target 1. And y'all know Sunday night buy target 1 is a short the market. We hit it. It is 100% there's a retracement. This is a 10:05 trade on ETH Sunday night. Soon as we hit buy target 1, automatic counter. That's a 5-minute chart. Let's see what happened right at the minute. And these are the bands, guys, and I apologize. Oh, we didn't quite make it. That's crazy. The 5-minute looked like we hit it. Yeah, no, not quite. +2 standard deviation of VWAPs, the blue dots. Didn't hit buy target 1. If we did, that was an automatic short. Again, what did we do? We pushed up. We failed to get to buy target 1. We came back down into the harmonic zone on the MES. And then where'd we go? To the mid. Now, is this a strong market? Absolutely. We fail it. Where do we come back to? Test the mid. Take longs. To where? Back to the zone. Guys, this is 55.21.5. The bottom of the zone is at 526. There's 4.5 ES points right there, free. Absolute free. Now, when you start seeing top wicks right here, then the next time you don't take the long here. When you start seeing top wicks on a 5-minute, don't take longs here because it won't hold the next time. We bounce, we bounce, we bounce. Are we going back up? Are we making new highs? No. Here's our high. Here's our lower high. When do we make a lower low? When we do, where are we going to go to? Well, here's VWAP. We're going to go straight there? I don't know. But I'm really interested when we make a new low at 521 to trade ES 521 to 517. 517 half. VWAP starting to slope off. Starting to flatten out. No, Ron, and again, I'm not bashing SPY. We got a lot of members that trade PVI on SPY and started that way. I'm really interested to see what ES does here. I don't know where Slingshot is. Slingshot below 0? Because our 5-minute trend's red with dots. See, this is the one fake thing about the trend. Everything stacked lower, boom, we bounce and then reverse. That is very indicative of a top. As long as we hold here, don't short. Don't short. Look left. Where are we going to short from? Short below the mid. Below the midline. Below 55.21. Don't lead it. Why? Because we're going to bounce up here in a heartbeat. Because that, my friends, is algorithmic. So let me do this. Let me take off the indicators. Let's go to Fibonacci. We always get off script. That, my friends, is algo. Right? Humans cannot run the market at a 45-degree angle. There's not enough buyers to do it. That's an algo run. Right? We had the very first one at the open, and then we flattened out. You see all these wicks? This is manual trading. This manual trading, and then we came down. This is a liquidity run right here. I'm willing to bet there's a PWG level there. Harmonic zone. We ran to it. From the harmonic zone, we never made it back to the half. We're going to the next level. And that would be, why is it saying weekly demand? That's confusing. Why is it saying weekly demand? That is odd. Oh, are we not at weekly supply? Thanks, Wolf. Yeah, that threw me for a loop. That's why I jumped back to ES. Yeah, Brad, bottom line is this. When the market gives us 2 times expected move, and it's paired up with another model. There's 26 models here, right? 2, 4, 6, 8, 10, 12, 14, 16, 18, 22, 24, 26. When it pairs up, when something else pairs up, it might be a volatility move, it might be baseline, it might be auto, it might be a fib. All of this 26 models. When something else tags itself with 2 times the expected move, you never, ever, 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 ever rule it out. You rule it out when you got a week like that's what 2 times expected move looks like. We ain't fucking going there. We ain't going there. Not like the one for this week. It's doubled up and it's not detached very far at all from the pyramid. Like that middle finger right there. That's John Holmes flipping you off. And that was last week. So the difference in last week and this week is not only volatility, but we also have other models that are starting to spread out, and the models are not highly concentrated. So what happens if we don't have a, let's go back to SPX. What happens if we don't have a 5,500 call wall and we don't have a 5,300 put wall? What happens? You don't have the support and resistance you're accustomed to, which means the market can go a whole lot further. No, not a silly question, P. It's crazy that you're, just so y'all don't think I'm insane, this is what happens when I stream. I get truncated avatar names. So that's what I see on my screen. P. It's not that it's hard to make long-term decisions. I would hold what you got. Again, I'm a caller person. When we hit all-time highs, I like to put calls on. I like to sell calls, 5% out of the money, 1 to 2 months out, maybe 3 months out, and then buy puts at whatever price the puts will pay. And I don't go, if I sell 10 calls, I don't buy 10 puts. I'd rather sell 10 calls and buy 6 puts higher up to where they might be in play. Yeah, it's crazy. Because I'm not streaming in Discord. I'm streaming in YouTube. How the hell does Discord know? It's crazy. All right. Any other questions? I will copy this and post it. I've already posted it. Just real quick. I have no idea where we're going to open tomorrow. But guys, this could be a really big week for OPM. Let's just max it. So you guys can see. Again, their grays all have earnings this week. Ron, which trade? SPX? No. Again, I mean, each week's a little different. This is, I think the biggest frustration new members experience when they join ITG. They come in to trade PVI and they realize the data is the science behind it. We have some general guidelines: when to sell, when to hold back ratios, when to sell 1-to-1, when to start hedging, where to take off some hedges. And I've written a white paper on the guidelines the best I can, but it is not mechanical. It is not mechanical. The trade itself is not. Now, here's the deal. If you go all the way back to 2018, there's not a single year the weekly PVI trades, all the way from 2018, if you never hedged, you never had a negative year. January 2022, week 3, PVI breached by 100 points. They still had $139,000 in premium. They had $74,000 given back on breaches because it was 136 and I think 12, the 3 breaches in 2022. So even if you sold 139 and you lost $70,000 on those 3 breaches, you still made $68,000 off $50,000 of buying power. Still made over 100% of your risk at risk. The data is the science. All the models, all the formulas, all the calculations, scrubbing all the data. That's why, again, that's why I spend 8 to 10 hours a weekend just doing the data. Because the data is what gets us in the ballpark. So this is the data from my hedge fund. I mean, this is how it worked. This is what I traded every month. I did it on a monthly basis. Now we'll be doing it on a weekly basis. The ones that are, any of them, if you ever find a blue, AMD is blue and has earnings. That 100% is a buy the strangle on AMD. These are all 15 delta. Again, 57 it's just an arbitrary number. The only reason that's important is because that 57 gets compared to that 80. That shouldn't be blue. That's white. I thought so. These are going to always be blue because SPY is elevated. Yeah, I got to go back and redo AMD. It's not blue. But Tesla, Google, NVIDIA, holy moly. NVIDIA, and I told y'all, this is what happens when these sumbitches go through a 10-for-1 stock split. They lose their institutional leverage. They're no longer institutional darlings. They're now retail stocks, and they lose value. They lose PVI premium. They lose pricing power. They lose all that. But the blue stocks, it's been weeks since we've had this many blue stocks on the calls and the puts. So what I would look at, again, ServiceNow just had earnings. I would not short Palo Alto. That's a long trade. I would look for, I'd have to evaluate KLA Tencor or ASML. I'm not crazy about shorting SMCI. We got Riot and Mara got earnings this week for Bitcoin. I would like to see, man, I'm sitting here looking at numbers. Sheesh. I mean, look at the ratio. Look at the ratio in SMCI and MicroStrat. Again, a 20,000, 2080 to 790. Not 3 to 1, but close. But the calls, look at the price. And so now, if you got the ability to short one stock, MicroStrat, most everyday traders don't have the ability to sell calls on a $2,000 stock. You could take that 1936 though with a negative 15 delta and a theta of 4.4. Keep that in mind. That's how much it's going to decrease each day. You could take that 1930. You could buy 2 Oracle for 60 cents. You could even get some Chevron and Exxon Mobil. You could get 2 AMDs because they have earnings for 230. And Oracle was 60 cents. That's 290 just in technology. Microsoft 190. Why the hell not? Apple 98. Why not? So there's $1. There's $2. AMD, there's 230. There's 430. There's 60 cents. You still got $15 of. You still got $15 of credit left. This might be one that would be willing to do a call debit spread or a call credit spread, sell a CCS, try and get $8 in credit. You'll know exactly how much money you have at risk, and then take that $8 and distribute it. The only reason I like Oracle is 1, it's blue, and 2, if they all run big, Oracle usually has a 2% week. And again, getting 2%, a 2% run on a smaller stock, a cheaper stock, it's free alpha. But up here, man, this is where I want to spend my $8. Earnings and blue. White earnings, yes. And it's a risk reversal, but you're not selling puts to buy calls. You're selling one call. You're short 115 delta. And if you do it correctly, you might end up with 8 long 15 deltas and short 1. How do you get hurt? If MicroStrat is the only stock on this chart that runs this week. And I meant probability is like 0.46%. And all you got to do is you got to make sure the deltas, and they're all pretty clean this week. What you don't want to do is you don't want to get in the habit of selling an 18 delta and then buying a 12 delta and doing even contracts, even shares, 1 for 1. And yeah, you get a little bit of credit, and then the next thing you realize is theta might not be the same, gamma might push 1, and then your 18 delta runs and your 12 lags, and it's a problem. But you can do that by just extra delta. Just like this week, we already talked about the 2 times expected move. If they're cheap and we can get them for 5 cents, Brad, premium is high. Again, this is premium. My big thing with option pricing, it's a comparison tool. You guys, there's no example of this right now, but all your life, if you're an option trader and you try to evaluate option price, value, you only look at price. Like, what's expensive? Is $5 expensive? Is $3 expensive? Well, it is, but it's also relative to share price. How much premium per share price? There's a ratio there that factors in over here. You'll notice the higher the stock price, the higher the premium. Except you go here and you get Taiwan Semiconductor 172 at 15 delta and it's 72. You go up here to Lowe's, it's 247 a lot higher, and it's 79. Well, beta. It's a lower beta stock. That's all in here. Gamma, Charm, Vanna, Beta, Delta, Theta, and then ratios. Historic, stock implied volatility, they change every day. That's why PVI changes every day. And that's why we rerun it every day. Is there a hidden gem? Man, if AMD had been blue when it had earnings, that's an automatic buy tomorrow morning. It's not. So I miscolored that one. I got to go fix it. Just white. That's okay though. White on earnings is still a good trade. Right? Apple is a better trade for earnings than Microsoft. PVI tells us that. You're going to get a higher return per unit of risk with your dollar here than you are here. How much more? 3 times more. 60, 60, 60. You're going to get 3 times more value trading Apple than you will Microsoft. Doesn't mean Microsoft's not going to do better. Doesn't mean you won't make more money off your $1.9 invested than your 98 cents invested. But basically, this one is half the price of this one, right? But the PVI is 1/3. This is the value. I mean, then look at NVIDIA. Shit, NVIDIA is, what, 50? 5 times more undervalued than Microsoft? NVIDIA is going to be a good play this week. And all this tells you also is, guys, you better not sell these calls. You don't get paid to sell these calls. So if you have a portfolio and your portfolio's got some of these stocks in them, you turn around and you're like, okay, Lam Research, KLA 10 Core, Meta, Microsoft, I'm selling calls on those stocks this week. Covered calls. Because the premiums are really, really high. How high? The premiums are more than 2 times the index ETF. And then you also go up here and you look at the ETF to gauge the market. Look at how much more expensive NQ is than ES or SPY. Q's than Y, than the SPUDs. And the SPUDs is a higher price, right? 557 is bigger than 480. But there's less premium because SPY's got a higher beta. But the options, it's also telling us that it ain't just the beta. The options are more inflated on Qs than they are on SPY. Why? Because of all these stinking earnings. All these tech earnings this week. So just doing that, you kind of know how to deploy capital. And again, if you're new, you might be like, well, man, that sounds great, but what do I even do? Just stick around. You're going to learn. It ain't a doctoral seminar tonight. Not the intent. I really wanted to go through this puppy because this one becomes important. So when everybody be like, why the hell did he sell, 53.50? Remember we talked about that earlier. What was it that we talked about 53.50 from? I don't even remember. I just remember 53.50 because I did my homework. Yeah, but again, Brad, it's not just risk. It's not just beta. It's not just premium. It's not just delta. It's not just gamma or Vanna or Charm. It's all of them and none of them. They all matter. PVI is everything. I had a guy on Reddit sitting there arguing with me. It was like, it's pointless to post that because it's last night's close and you don't have implied volatility for each stock. And I'm like, bullshit, Bob, I don't. I pay $485 a month to have it. Pay a lot of money to get all the data feeding into PVI, the OPM. ORATs. Power Ops. Because different ones of them have the required ratios that we need for the OPM. So yeah, it's more risky, but you guys all say that. And this is what kills me with Twitter. Guys say that, Qs are higher because they have more risk. The earnings have more risk. Okay, quantify it. How much more risk? I got it quantified right here. They got that much fucking more risk. 268 to 61. That much more risk. There's your value. There's your premium. You want to trade at a discount or you want to trade at a premium? That's your call. You want to pay $26,000 for a car? You want to pay $61,000 for a car? They're both going to get you there. One might be a little smoother ride. I mean, it's all about discount. I want to know which ones are at a discount, which ones are at a premium, and which ones, orange and white, are in the middle, and which one's higher on the ETF for the week. Look at the puts. You don't think they're making you pay more for QQQ puts than they are for QQQ calls? Why? The market makers have done this. The institutions have done this. They know the risk is which way? To the downside. And so for folks that want to buy puts, they're making you. How did Google do on their earnings? Terrible. They really didn't, but their stock did. How did Tesla do on their earnings? Terrible. So what do you think they're going to make you do if you want to trade Meta and Microsoft and AMD and Apple? They're going to make you pay extra money in case they're terrible, like their predecessors last week. It's the way the market works. No, the thing about IBKR is we could trade tonight. But as far as ES's run tonight, yeah, you're going to get a little bit more premium for the calls now than you would have, but you ain't getting any premium for the puts. Well, what's going to happen tomorrow morning? I live in this world. We talk about it all the time. Not enough, probably. But, let's go back to a 30-minute from last week. And this is ES, so this is current. All we did tonight was run Friday's high. We ran Friday's high. We didn't make it to buy target. Where's ES at now? Right here. Did we go back and repair this large? Again, they painted that wall, that dark wall right there, they painted it one time. Guess what? They just repainted it. And now it's got a nice coat of paint over it. They just repaired that structure from Friday. That's all that happened tonight. That's the market. So when you look at this, are we still going up? Well, here was Thursday's high. We took out Friday's high. A couple wicks. Are we going to keep going? Don't know. If we do, where are we going to go? We're going to go back up here. We're going to go back to repaint up here to 55.44. At what point do you sell calls? Whenever the premium meets whatever your requirements are. That's the art behind PVI. The art is when to deploy capital and how much. Man, go. It's biblical too. Folks will sell tonight, tomorrow morning, and then the market's going to run and somebody's going to sell calls for twice as much. That's the worker. Right? The worker that didn't start till 12th hour of the day. And he got paid the same amount as the worker that started it the morning. And how about the guy that comes in and only trades power hour? And he makes the same money as the other guys that worked all day. And he says, hey, worker's worth his wages. You agree to it? If it meets your goals, don't be pissed off that you didn't wait. I tell everybody this. We're up 57%, 1% a week. Go look and do some research and find out how many hedge funds are up 57% year to date with zero losses. Now, Did we clinch Wednesday? Hell yeah, we did. Did we clinch when Israel launched rockets back at Iran? Hell yeah, we did. Overnight, Thursday night. I was up till 2 in the morning helping people. Did we clinch when we breached PVI intra-week? Yeah, we did. Do we clinch in the back of our mind knowing this is the longest PVI win streak closing inside the ranges it's ever had on the weekly since 2018? This is the longest win streak. Yeah. That doesn't make me excited to go sell PCSs or CCSs. Guys, it's going to happen. So, do you stop? No. If you got major life changes to do right now, I would go to cash. I'd get 5.5, 5.4 yield on my cash, and I wouldn't trade PVI at all. And again, I'm already up 57% on the year. The actual PVI portfolio is at 82.3. The model. Those people are retired. They're tickled pink. I don't need to trade their account anymore this year. Yeah, and the other Merkabit is that you can even on your other brokers, you can do options on ES. So, a lot of times Sunday night, if the market's quiet, you're able to get into a call debit spread and a put debit spread. Again, the newer guys don't know this, but here's I'm going to type it in. Debit spread 101. Guys, this is trading options. Buy tight, sell wide. 5 wide. Don't spend more than $1.25. Sell 100 wide. People be like, why do I sell 100 wide? Well, if we breach by 12 points and you sold one 100 wide contract, you got $50,000 at risk. Everybody panics. Or if you sold one, you got $10,000 at risk. And we breached by 12 points. How much did you lose? $1,200. If you sold two 50 wide, how much you got at risk? $50,000 or $10,000. But if we breach by 12 points, how much did you lose? $2,400. If you sell four 25 wide, how much at risk? The same. But if we breach by 12 points, how much did you lose? $4,800. Do you want to lose $4,800, $2,400, or $1,200? For the same risk. People are like, I can't sell 100 wide. It's too wide. Why? It's the best deal in town. Why risk losing $4,800 when you can get the same premium and only risk losing $1,200? What are the chances PVI, the 100 wide, your longs go in the money? It's happened 2 times in 14 years. One of them happened to be week 3 in 2022. And so why do I do and again, you're not a member, so, and I'm just talking, guys, but my people, they hear me do this all day, all the time. I enjoy, oh my goodness. We're not going to do that. Let's go to this nice little easy one. See that box? See the white box, Merc? Check this out. Did we close above it or below it? Below it. Did we close above it or below it? Above it. Above or below? Above. Above or below? Inside. Above or below? Above. 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 Below. Inside. Above. 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 above, below, below. 3 inside. The rest of them were above and below. If you put on a 5 wide for $1.25 here and a 5 wide for $1.25 here, how much money you put in the bank on the table? $2.50. When we close above it or we close below it, how much money do you make? $5. Wait a minute. Double my money. Double my money. Double my money. Double my money. Lost my money. Lost $2.50. Double my money. Double my money. Double my money. Double my money. Lost my money. $2.50. Double my money. 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 See the point? Weekly supply demand box. If we can get a 5 wide call debit spread and a 5 wide put debit spread, Sunday night futures open flat, we want to get those on. If I don't have interactive brokers, I'll do it with ES. I do it with ES anyways on Sunday nights usually. Why? Because ES options open at 18:15. And SPX options don't open up till 20:15, even on interactive brokers. And the move was gone. Like tonight, you can't get SPX. Brad, I have a horror story about an auto trader. I did it through interactive brokers, their API, and this is back in 5 or 6. Man, I lost over $250,000 on a Saturday, Sunday. And not me, but it was my portfolio. No, the white line is weekly supply demand. So here's PVI. Here's PVI. Here's what we do each week. I'm on daily. Let me zoom in. Here's our levels. Our weekly supply demand the box. Above the box, we're leaning long. Below the box, we are leaning short. What happened when we dropped below the box? We flushed. What happened when we dropped below the box? We flushed. What happened when we got above the box? We ran. Above the box, we ran. Now, I have weekly R2 right here and weekly R3. We have weekly S2 and weekly S3. And then usually PWG level and then PVI. This was last week. Each one of these levels are important. No technical analysis needed. They're just important. If they match up with a fib, if they match up with a moving average, if they match up with a major supply demand zone, a recent swing high or swing low, they're even more important. So I work my hedging off of, in the event that we break like we did last week, and I told everybody, I'm going to sell PCS when we get to Friday's lows. And we got to Friday's lows early on Wednesday. And the reason I sold some is I thought we would hold weekly demand. And I sold one at 255 and we didn't hold weekly demand. I covered the one contract at 250 just so that I had a back ratio. I was long 5, way down here, but instead of selling PVI, I sold the yellow. And I sold 4 of those, $2.50. Those damn things went to over $26 a contract Thursday morning. It was bad. Was there a drawdown? Yes. But I told everybody, when we get here, you hedge. You hedge at weekly S2, meaning you buy a 5 or a 10 wide debit spread at weekly S2. And when it goes to weekly S3, usually you take it off. Usually I do. But usually We don't go above the box Monday and Tuesday and then absolutely sell off on Wednesday. We don't usually do that. So I didn't take off these hedges. I left them on. I closed my hedges out Wednesday morning or Thursday morning, right when we bounced off PWG level. I ghetto spread one of my puts. I took, I don't know, $3.60 off the other two puts. Long puts. I mean, big money. 360 on, SPX is no joke. But again, the system I use, and again, guys, there are a lot of people in ITG that trade PVI different than I trade it. A lot of people. And there's no right or wrong way. It's an art. You got to figure it out. And I post my trades for people to follow, kind of see my rationale. I ain't going to sit there and go through a 30-minute dissertation as to why or why not I'm doing this. And I damn sure don't want to sit there and answer to people asking me questions or making suggestions why I should do what they're thinking I should do. I don't do that. I do. I don't post my personal trades on here. Usually, this week I posted some of the personal trades. The last 2 weeks I did because I traded it a little bit more aggressive. So my PVI trades this last week in my big portfolio were $32,000. It was a fucking huge week for PVI. Now that included my ES shorts. That included my puts. But selling that puppy above $20, $25, and it bounced so fast from 25 to 17 that by the time I put in my order, it was back at 14. It was crazy. But that was all top wick. And y'all saw that. You should have seen it. Right here. Here was Thursday. 15-minute chart. What happened? Boom, we hit it, and I told y'all, that's it. I'm going long. I cut off my puts, took profit on them, closed my PDSs. Where did we run back to? S2. Weekly S2. This is SPX. I don't even chart it during the day. ES, where did it run back to? Weekly demand. There it is. Right back to the box. Right there. That trade right there was about $20,000. Now, did we get back up here? Nope. What are you doing? You better not be long. This is a cut your trade. This was a free exit. This was bears are going to let bulls get up and they're going to give you a 3-second run. Well, you squeeze your sphincter and you run your ass off. Because guess what? They come in to get you. And I don't know any bulls that can outrun a fucking grizzly. But look at this puppy. Boom. And now, and I know I'm giving some of y'all getting PTSD from this one because we talked about it. I'm long. I'm cutting my longs. I'm short. I'm not selling here. You know where I sold? We came back down. I loaded up down here. And I sold. Why? Because this is not in risk because of this happened. Did we get back into the box? No. All institution did was reload shorts right here. What time? 1 o'clock. Why? 1 o'clock's important. We know this all the time. Again, AM PM system. This thing was just textbook on Thursday. And if you didn't trade it perfect, that's okay. If you made every mistake in the book and you lost $5,000, that's okay. You won't make that same mistake twice, and the next time you'll make twice as much. Absolutely, Wolf. I'm reloading. I'm doing the same thing the hedge fund guys are doing. And I talk to them sometimes during the day. I get a smiley face emoji on a text coming in at 1 o'clock. Like, watch this rug pull. And again, it was like $17,000 trading futures last week. I had a good week. I had a really good week. And again, red month, and I finished super green. I made more money in the second half of July than the first half. Why? Because the first half I was waiting on I was waiting on freaking SPX to get his ass up there and hit gravity point B. I was waiting on this, but I wasn't taking longs because everything was telling me the escalator down is going to be sharp. And again, back here on the 10th, I think it was Tuesday or the 10th, Tuesday or Wednesday, Nunya was asking me, hey, Vet, is this when we put on the 5,200, 5,250, 5,500, 250 point or 200 point put debit spread? And I said, not yet. We weren't there yet. We were still chasing gravity point B. And we hit it. We actually hit it this day. We hit it Friday, and then we pushed higher Monday and Tuesday, and it was kiss of death. It was, again, it's one of those guys, I tell everybody, don't sit out. Scale down, size down, don't sit out. People ask me all the time, man, you're in Cozumel, why are you trading PVI? So there is a 52-week a year track record. So my Sharpe ratio is accurate because every week is traded. I don't take a single week off, even the weeks are really, really bad. The worst month since 2020, the worst month has been like 3.48%. We have not had a losing month in PVI since 2018. We have never had a losing month. So if you hadn't had a losing month, let me post this for the non-members. And again, guys, I'm not trying to persuade anybody. That's not how it's just this is my life's work. If you look at the months, 8.9, 10, 8.25, I know it's hard to see with the Zoom. 10, I posted on Twitter, 6.3, 5.9, 5, June was horrible. There's no premium. It was hard to get, look at this, $700, $825, $789. These are painful, but it adds up. It still adds up. It ain't easy. Total premium received is a lot more than the total P&L. Why? This is how much money I sell. Now, it's kind of false this last week. I had so much premium in there. I'm not going to go in and if I scout one contract 5 times, I don't count it. I don't count it all. There's so much more income here than what the total P&L, but that's just the way I trade it. I've done this, guys, for 20 years. You're not going to have this. There are going to be people who are going to have a lot higher than this. I'll stand here and applaud. One of the guys said, man, I can't believe I made more money than Vet. Good. Good. Because I'm going to show you one thing. It's all I care about. Is that bad memory jammer right there? No negatives. I don't give a shit if I make $500 one week. I only got paid $500 to sit here. 5 days. That's okay. This is my seat time. I like to make money on Monday and Tuesday, get paid premium, and then the better I defend it, the more money I get to keep. And all the non-ITG members, I tell guys this all the time. How would you feel if your boss gave you $2,500? Monday morning when you walked in, boss brings you coffee and he hands you an envelope with $2,500 cash. The better you do this week, the more of that money you get to keep. Every time you screw up, every complaint, every time you drop the ball, every error on reports, every time you got a negative, you got to put back $25. All week. You late? fucking 50 bucks. Customer complaint, 100 bucks. You keep, the better you do that week, man, how productive would we be as a nation? It's what PVI is for me. And that's why I told y'all, Wednesday, I told you, and man, I hit it with King a lot. I felt bad because I know when I sold 53.90s, a bunch of other people were going to sell the same strike because they're like, well, hell, if he's doing it, I'm going to do it. But they weren't prepared to do what I did. They weren't prepared to hedge and trade futures as aggressive to the short side as I did. And we had one member, June, had his best month he's ever had trading. Been trading for 6.5, almost 7 years. June had his best month. July, his first 2 weeks in July, were starting to break his June record. Made a mistake 2 weeks ago, rolled early, lost some serious coin, and then Wednesday, lost, sold 53.90s, didn't hedge, took a massive loss, and quit the Discord. I don't want members to join us and go and have their trading strategy and emotional EQ like a fucking EKG. Guys, you want a flat line. This is flat line. And the crazy part is we're at 57% for the year. And guess what? 30 weeks divided by 32 is 57%. We are on course 1% a week. It's not good enough for everybody. Now, a whole bunch of people, I don't answer YouTube. So I don't have a login to log into ITG YouTube and answer questions. So the first question that always gets hit is, how come he doesn't level up? Guys, I'm going to tell you right now, 50,000, and this portfolio's got 212,000 now. But 50,000 every week, hit or miss. And if I go off because I trade ES and don't calculate it right, or I accidentally swing one extra contract, not intentional, but I own up to it. We went over here. I own up to it. But in doing it, guys, there's a big difference, a huge difference in 50,000 at risk and 250,000 at risk. My personal account is about 250,000 at risk. If VIX is over 16, I'm trading 200,000 every week. If VIX is over 20, I'll be over 250, maybe 300,000 at risk, which is what, 3,000 watts? I used to do 250, 25, and 50 watts. So trust me when I say wider is better. One, you got less contracts. So you got less money to lose if you get run over. Two, you got less contracts. So it's a lot easier to hedge. How many ES do you need to hedge one SPX credit spread that's in the money? 2. How many do you need to hedge 20 SPX contracts that are in the money? 40. Not many of y'all's broker's account lets you short 40 ES contracts. Again, wider's better. Wider's what we built the hedging model off of. And their guidelines. They're not hard, fast rules. Everybody wants hard, fast rules. Guys, it doesn't. Again, you can have them. Tammy does them all the time. Tasty Trade does them all the time. Scotty Smith does them all the time. They got hard, fast rules for their systems. And it's mechanical. Them motherfuckers right there ain't winning like this. They ain't straight green 30 weeks in a row. I'm not saying mine's superior. That's not the concept. Mine's just not mechanical. If you want easy, life's going to be hard. If you want a custom-built house, you better have a custom-built trading system. If you want the cookie-cutter home with no yard, and next-door neighbors you hear taking a crap when their windows are open in September, get you a mechanical system. If you want a simple system to make money, if there was one, my goodness, I trade it. PVI is not simple. Yeah, Brad, there's no question. And that's why, again, come and learn and start small. And don't worry, guys, I cannot tell you how many of you guys in ITG, out of ITG, how many traders on Twitter, they absolutely mock me at 1% a week. Well, I thought you were a trader. Okay, jackass, show me where you've made 57% year to date with no losses. Again, y'all see Moose. Y'all see Moose, his futures trading. He was a theta only guy until a year and a half ago. Now, the guy's made $2 million in less than 2 months off a $2,000 investment. I don't know if Apex is going to be able to pay him. But you don't make $2 million off a $2,000 investment into 20 Apex accounts and in 60 days clear $2 million. You don't do that with a cookie cutter system. Same reason why a lot of people have trouble following him. There's a big difference in experience. And why he tells everyone, trade MNQ, don't trade NQ. Why I tell everybody, trade one contract. And if one contract is anywhere near 20% of your available buying power, trade SPY. If you're worried about pin risk and assignment, trade XSP. How do those work? I don't know. I'm not the guy for you because I don't know how to do that. If it happened to me, I'd just take whatever they assign me and I'd move on. But start with one, start with two, and do it every freaking week. Don't give yourself an out. Force yourself to do it. If I don't sell PVI, I don't eat, I don't breathe, and I won't let myself take a crap. I'm going to sell PVI. Why? So I have a track record. It's part of my life. And two, so I get paid for the 10, 15 hours I've spent this weekend doing the math, doing all the work. I know where all the levels are on SPX. I don't need them on a chart. So tomorrow at 12:42, when ES hits a level, and I'm like, man, I'm doing this because I remember my homework, where SPX is. I'm not going to sit there and watch SPX tomorrow. I'll trade ES and NQ futures. So I went a lot longer than I planned, again. But, I want y'all to, the process is not the money. The process is for you to figure out where am I going to put my long call and my short call and my long put and my short put. And how am I going to defend it if the market does not cooperate with us this week? The market has cooperated almost every week. If you can see this, that's 92.3%, 115, 94%. And 22, third week, was the biggest loser, second biggest loser in PVI history. The 100 points, 99 point whatever. But we're averaging, over 3 years, I'm averaging 100%. But it's 100% off of my 100,000, not 100% off of my 50,000. And the reason why, look at the Sharpe ratio at 9.26. Guys, when I sold this damn thing, our Sharpe ratio was at 6.78. From 2006 to 2009, and then 2009 to 2012. We were at 6.78 on the Sharpe ratio. Why is it better? Models are better. We're spending more time doing it. The market's improved. Has no idea. Again, we do better when the market sells off. Why? We get paid more premium. If I can make $3,000 off $50,000 invested every week, if I can make $3,000 on 3 contracts, that's a hell of a lot better than making $3,000 on 5 contracts. And if I'm making it on 3 contracts, that's only 30,000 at risk. So my Sharpe ratio is going to go up substantially. My income's not. It's all about risk-adjusted returns. All right, guys, I'm out. I'll be around. Non-ITG guys, join our Reddit, subreddit, Indie Traders Guild. Join our subreddit and converse there. Do not join. Don't go hear this and go join ITG. Ask questions. I love it. We got a dozen members that said, I started following you in Reddit. I made $2,000 or $3,000, since May, and we're going to put $100 in and join. When you join, we are not going to sit and talk all day about PVI. We don't talk about it much at all. Why? The models, the stats, the algorithms, and the numbers are in front of you. We talk about futures, trading ES, trading NQ. We talk about trading AM, PM system, the clock system that I work through the day, how to expect new highs or new lows a day in power hour, when to expect them, when do we know for certain we've had an intraday reversal, when to take counter trades, and how to look at the market awareness, market structure, market relationship with each other. And that's what I do. It's what I teach. So again, it's not for everybody. If you've made a couple $100 selling PVI using it, then spend $99 and join for a month. I promise you'll learn $99 worth of shit. And the jokes are free. I promise you'll learn more than $99. The only thing I ask is don't join, take a bunch of stuff from our Discord and go share it with another Discord. It's my life's work. I wouldn't ask you to go build a freaking $1.2 million house and let me live in it for first 6 months by myself. So, again, there's some alpha we can't protect. There's a lot of intellectual property that I just give away. That's why we charge. One, so that all the other Discords aren't using our stuff. But there are a lot of people from other Discords that join for 8 to 12 days. They come in, they copy all of our stuff. They listen to our tips, our tricks. They learn some strategies, and then they go sell it like it's their own. That's unfortunately the world we live in. All right, guys, I'm out. Peace, and I'll be around. Hit me up on Discord, or non-members hit me up on Twitter or on our subreddit. All right, guys, I'm out. Later, bye.